President Trump delays tariffs on Mexico by a month, but with the S&P 500 trying to hold above 6,000 and sitting just below its record high. Let's bring in Renaissance Macro Research Chairman Jeff deGraaf for maybe some handicapping of the next move. Jeff, great to see you.
Good to see you, Mike. Thanks for having me.
All right, so, pretty good January point to point, although I guess there's a lot of nuance to how it got there. We sort of teased that you see a kind of a linchpin sector in here in terms of determining whether this market stays supported. What's that?
Well, it's consumer discretionary, right? Which is a pretty heterogeneous sector. It's, there's a lot of stuff going on there. Yeah, I'd point to home builders and say, boy, those look like tops, and that certainly looks more vulnerable. But look at the restaurants, look at the hotels, look at the cruise lines, look at some of the apparel retail names. I mean, those are still in a pretty good place, and they turned positive for us on a relative basis last week. Now we do this on an equal weight basis. If you didn't, you'd have Amazon, which would dominate. But when we do it on an equal weight basis, it's still limped into this bullish condition. It certainly wasn't emphatic, it wasn't resounding, but it was good enough. And I think that's going to be really important as we go forward, because when we're in this part of the cycle, it's really important for discretionary to hold up. If it tails off, if it starts to underperform relatively, that becomes more of a problem for the broader market and implies usually a policy mistake or something along those lines.
Yeah, I mean, Amazon and Tesla for the market cap weighted sector is like almost 40% of it. So, yes, equal weight tells you the real message there. I guess more broadly, Jeff, how do you feel like the market is acquitting itself in this period? It's had to kind of deal with a little bit of that gut check on the AI theme. And now, of course, we have tariff noise that at least seems to have a tactical impact.
Yeah, look, I mean, we know that February is a tough month, right? We started January, which usually is a good month. We started that oversold, which was good news. We actually got to an overbought condition as we ended last week. So now we're starting February, which is historically seasonally weak, from an overbought condition, right? We know that historically over the last roughly 100 years, you've got about a 53% probability of positive returns for the month of February. That compares to something that's usually in the low 60% for most other months, with the exception of September. So February is the second worst month historically, behind only September. I think we're just going to have some choppiness. We haven't liked semiconductors for 6 months now. I mean, they broke on a relative basis. NVIDIA has really kind of been the lead horse there, the pole horse. I'd say that, Navago or Broadcom. Those are the two names that look a little bit better. Actually, we like Broadcom better than NVIDIA. But the rest of the industry group just doesn't look that good. Software looks okay. Some of the media names look pretty decent, but I think semiconductors are still under pressure. I think there's more to shake out from that as we go, mostly because expectations are just so high. And I think the shot across the bow with DeepSeek was more really about maybe resetting expectations that, hey, this isn't just a one-way street, and that there probably is other opportunities. And frankly, what productivity does is find creative ways to get people resources and products at a lower cost price. And I think that's exactly what that's going to do.
In terms of Bitcoin, I found it interesting over the weekend as we were getting the firmer news on tariff intentions. It traded down pretty hard. I guess it's probably because it trades all the time. It's a global asset. If you want to take down risk, you could do it on Sunday morning in Bitcoin. But it's firmed up here now, and it's been just really sideways for a bit. I wonder how you read it at this point.
Well, so look, the trends are still strong. It's consolidating really. Once it broke through 100,000, it struggled to get above there. One of the things that we look at is what the positioning is in the futures market with Bitcoin futures. And I think one of the interesting tells for us is that when we look at commercial hedgers, so these are players that have an underlying position, they're just using the futures market to hedge that risk, they're actually net short. And when we look at the T-stats and we do some of the quantitative work around this, we find that there's a pretty good relationship between their position and the forward returns. And in this case, you want to follow what they're doing. So they're at a pretty excessive short position right now, and we just say, look, that's probably going to be an impediment if you look at the history of what these guys do and what the forward returns are. It's still a good trend, so I think a sharp break that probably brings them back into covering those shorts to us looks viable, but I still think there's some vulnerability there, so we want to be careful.